Ladies and gentlemen, hold on to your seats because what I'm about to share with you today might just be one of the biggest financial shocks of 2025. Imagine waking up to find that two of the world's most watched currencies, the Iraqi Dinar and the Vietnamese Dong, have undergone a rate change, confirmed on a national scale. Yes, you heard that right. This is not a rumor, not a social media prediction, but an unfolding story that has shaken the forex world, investors, and even governments who keep a close eye on the global economic pulse. Before we dive deep, make sure you hit that like button, subscribe to the channel, and turn on notifications because what you'll learn today could change how you look at currency revaluation, economic reform, and your financial future. Now, let's talk about this financial earthquake that's got everyone talking. For years, speculation about the Iraqi Dinar revaluation, often called the RV, has circulated through financial forums, YouTube channels, and investor communities, with many wondering if Iraq's massive oil wealth, combined with its gradual economic recovery, could eventually lead to a significant rise in the dinar's value. Fast forward to today, and we are witnessing early confirmations coming from credible sources within Iraq's national banking system, pointing to official adjustments in the exchange rate that are already rippling through international markets. The announcement reportedly came after months of silent preparation by Iraq's central bank, coordinated with international monetary institutions, to stabilize the dinar against the US dollar while boosting the confidence of foreign investors. This move, though carefully planned, is sending waves across the financial landscape because it's not just a number change, it represents a strategic shift in Iraq's vision for economic independence and growth. What makes this development even more powerful is the timing. The global economy in 2025 has been under immense pressure due to inflation, shifting oil prices, and the ongoing realignment of trade partnerships across Asia and the Middle East. Iraq, once considered unstable for long-term foreign investments, has quietly built a foundation of financial reforms that now seem to be paying off. Experts believe this rate change is only the beginning of a larger plan to integrate Iraq more deeply into the global economy, allowing it to trade more efficiently and attract global capital. And then there's the Vietnamese Dong, another currency that has caught investors' attention for years. Vietnam's manufacturing boom, its digital infrastructure growth, and its steady trade balance with global partners have all made the Dong one of the most underrated currencies in Asia. With both the dinar and the Dong showing confirmed national rate adjustments, analysts are calling this a dual shockwave, one that could potentially reshape forex trading patterns and redefine where global investors place their money. But here's the real question: why now? Why are these revaluations happening at this moment in time? Some experts argue it's because countries like Iraq and Vietnam are positioning themselves as regional powerhouses, ready to step out from under the shadow of economic dependency on the US dollar. Others believe this is part of a coordinated move between nations, seeking to rebalance the global currency system, giving emerging economies more leverage. Whether this is a step toward long-awaited financial sovereignty or a calculated geopolitical move, one thing is certain: this change is real and it's happening right now. We're no longer dealing with speculation or hype. The confirmations coming from within both nations are solid enough to suggest that something transformative is underway. Investors who've been patiently holding on to dinar and dong for years might finally be seeing the first signs of what they've been waiting for. And for the average person, this news could open doors to new opportunities in currency investment, trade, and economic growth. So stay with me through this entire video, because what I'm about to break down next could help you understand not only why this revaluation matters, but also how it could impact your wallet, your savings, and the entire global financial system. Don't blink. This is the beginning of a story that might redefine 2025's financial history forever. Now that we've established the magnitude of what's unfolding, let's peel back the layers and understand why this rate change was even possible and what forces have been working behind the scenes to make it happen. The truth is, Iraq's journey toward currency reform didn't happen overnight. It's been a long road of reconstruction, political negotiations, and economic stabilization efforts that began years ago, but only now are bearing visible results. For nearly 2 decades, Iraq's financial system operated under intense pressure, balancing international expectations, managing oil exports, and fighting internal corruption that weakened investor confidence. But since 2023, the Central Bank of Iraq has quietly implemented a series of reforms designed to strengthen its reserves, digitize transactions, and reduce dependency on cash-based trading that often enabled currency smuggling and dollar leakage. With the introduction of new electronic systems and partnerships with major global banks, Iraq's financial transparency began improving drastically. That increase in transparency attracted renewed interest from investors who previously considered Iraq too risky. Oil revenues, once trapped in inefficiency, started being redirected toward infrastructure, education, and rebuilding projects that would sustain long-term growth. Gradually, the world began to see Iraq not as a post-war economy, but as a potential emerging powerhouse in the Middle East with untapped wealth and growing regional influence. Behind the scenes, international pressure also played a major role. The IMF and World Bank have been urging Iraq to modernize its monetary policies for years, emphasizing the need for an accurate and fair valuation of its currency that reflects true market strength. This alignment between domestic reforms and international standards created the perfect environment for a controlled rate change, one that could finally stabilize the dinar while boosting public confidence. The confirmation that Iraq's central authorities have adjusted the rate nationally suggests a synchronized effort between policymakers, bankers, and foreign trade partners to ensure this move doesn't lead to inflation or economic chaos. And as this news breaks across major trading platforms, analysts are noticing subtle but powerful reactions in forex markets where investors are rapidly shifting positions. Many of these traders see the dinar's adjustment not just as a localized event, but as a signal of wider currency realignments that could affect other nations heavily invested in the oil and energy sectors. At the same time, Vietnam's progress provides a fascinating contrast. Unlike Iraq, Vietnam's currency growth is built on industrial performance, trade diversification, and a disciplined economic model that has attracted global manufacturing giants from electronics to textiles. Over the past few years, Vietnam became a key player in the global supply chain, competing directly with China in certain sectors, and that growth naturally pressured its currency toward a more realistic value. The Vietnamese government has been cautious not to let the dong appreciate too quickly because of export competitiveness. But the recent confirmed rate adjustments suggest a controlled appreciation that aligns with the country's stronger fiscal position. When you see both Iraq and Vietnam making moves toward realistic currency adjustments in the same economic window, it's more than coincidence. It's a sign that the world's emerging markets are stepping into a new phase of financial empowerment. Now think about the global ripple effect. When currencies like the dinar and dong begin to show real strength, it challenges the long-standing dominance of reserve currencies like the US dollar in regional trade. That's why some financial experts are calling this moment a quiet revolution in currency dynamics. Iraq and Vietnam's actions might inspire other developing nations to reassess their own exchange rate policies, creating a wave of adjustments that could reshape global trade flows in 2025 and beyond. This is why major hedge funds, institutional investors, and forex experts are keeping their eyes glued to the charts right now, because the financial maps are being redrawn before our eyes. If these changes hold steady over the next few months, we might see new bilateral trade agreements emerging, regional economic blocs strengthening, and digital financial systems becoming the backbone of this transformation. But let's not forget the ordinary investors, the people who've been patiently holding dinar or dong, following news updates and hoping for a legitimate sign of change. For them, this isn't just about profits. It's about validation after years of skepticism. Many were told the RV was a myth, that it would never happen. Yet, here we are in 2025, watching verified reports confirming national rate changes.